Why you should invest in Nordic small-cap companies. In financial theory, the markets represent the correct price for any asset at any time. This is of course bullshit, as a simple look at the results from Buffett and Munger or other great investors show. However, I think it's helpful to start from a place where you assume that the market in most areas are pretty efficient, but there is a degree of efficiency. For example, if you want to analyze Airbnb, Apple, Nvidia, large stocks like this, you are competing with financial analysts, hedge fund managers, institutional investors, etc. from all over the world. A company like Renaissance Technologies has amounts of data that you will never get and is truly a David versus Goliath scenario. My advice would be to not really compete in such an area. The lucky thing is that there is very profitable areas where competition is a lot lower. This is the subject of this episode. If you are based in the Nordics and have an interest in investing, you are extremely lucky, in my opinion. First of all, the Nordic markets are very shareholder friendly, where the rule of law makes sure that individual investor rights are protected. The degree of fraud in these countries is very low. The financial statements of public companies are, for the most part, very representative of what's going on in the business. If you're from one of the Nordic countries, you take that for granted, but it is a very rare thing. Just look at financial markets in Africa, South America, investor rights in China. The degree of investor protection in the Nordics are not something you should take for granted. Furthermore, these Nordic countries are very advanced in the terms of technology. Actual cash is nearly extinct. Credit cards and online payments are the norm. The efficiency of commerce is very advanced. If you have been to Germany or the United States, you see faxes still being used. You see many places where they only accept cash. You have to tip people for carrying your luggage. Suffice to say, the Nordics is a special place for commerce. This translates to the financial markets. We can trust the financial statements. There is a low degree of fraud. Technology is easily implemented. Overall, the circumstances for investors are the best in the world. But there is another thing. It's a very small region. The opportunities for growth is amazing. Just look at some Swedish companies. You have Spotify, who everyone knows about. You have IKEA, the global leader in furniture. You have Volvo. You have a booming gaming industry. You have industrial companies. Okay, move on to Denmark. You have Lego. You have Novo Nordisk. You have Carlsberg. You have Maersk. Norway has oil and fish and Medistim. Move on. The point is that many great innovative companies comes from this small region in Northern Europe. If you have insights to these markets, understand maybe one or two of the languages, your opportunity for investing in small cap companies is perhaps the best in the world. The competition is limited if you compare, for example, to the United States. For companies below $100 million, the financial institutions and fund managers that follow such stocks is very low. The opportunity set, despite the small size of the region, is absolutely fantastic. In general, investing in small cap stocks is a great idea in order to outperform the market. As I've already said, the competition is very low. You have no edge when you are buying Apple or Microsoft. Just invest in the index and you will have a solid return. But small cap stocks, in addition to being underfollowed, has a large runway for growth. If you have a company with a market cap of $50 million or 500 million Swedish or Norwegian kroner, it is not that hard to double in size. Compare this to Apple. In order for Apple to double, it has to move the entire stock market. They have to sell iPhones to people who aren't even born yet. But a small niche company in Denmark, Norway, Sweden, or even Finland has a great opportunity to double in size. Okay, so back to focusing on the Nordic region. It is very common for a Nordic company to expand from one country to another. This means that the addressable market for a Nordic company is pretty large. Take Plejd, for example. They rolled out their product in Sweden and captured the market. Then they move on to Norway and the product grows like a weed. This is because Despite the friendly rivalry between the countries are very similar. Another example is Plejd AB. They are the market leader in both Norway and Sweden. Take Freetrailer from Denmark. The concept is working in many Nordic countries. The international expansion is working great, so now they can take on countries like the Netherlands and Germany. So any small company from the Nordic region, because of the similarities between regions, has a great addressable market. And the rule of law is similar, so the costs to set up shop in another country is surprisingly low. I think this is hard for an Englishman, an American, or even a German to understand. But if you are from the Nordic region, you know how similar the countries are, and how easy it is for a company to expand. Okay, so I would like to sum up the key takeaways from this episode. If you are from the Nordic countries, or at least comfortable with the similarities between the countries, your opportunity set as an investor is extremely advantageous. The countries respect shareholder rights and the degree of fraud is very low. The integrity of management in most companies are very high, and this is also because of the specific culture in the Nordic countries. Furthermore, the financial markets are not that developed, meaning that many small cap stocks are not followed by fund managers or institutions. The opportunities for a small individual investor is fantastic. Thanks for listening. In the future, I will publish episodes of individual companies from the Nordic region. Please follow if this is of interest.